This is the last market brief for this week. Let me just change some details here. This will be for everyone, sort of like a free look into the kind of stuff that I do nearly every day. Had the wrong date on there. Now I have a new microphone today, so I don't know whether it's a little bit lower in volume than the other one. I'm going to have a look at that. But hopefully the background noise might be a bit less now with this. So like I said, this is a free look into what we do throughout the week. Since it's Friday, try not to do anything silly. Don't overtrade. If you've had profits for the week, don't throw them away. I would suggest starting your weekend early in that case. So I'm going to be looking at gold futures and crude oil futures, which are my two specialties. We're going to look at the larger time frame institutional order flow, which is the supply and demand stuff. So with that in mind, I have some of my own proprietary ways of looking at things, which are quite a bit different than what you may find out there. There are some parallels, but I don't really necessarily require loads of conditions and a whole bunch of stuff to have an area of interest, especially because I'm an intraday trader and all of my trades are basically between 10 minutes up to about a couple of hours in length, with the average duration of 45 minutes. Okay, so if you're hearing banging and drilling and a whole bunch of other stuff, that is my neighbors doing up their house. So I have a lovely soundtrack that's been going on for about 2 weeks now, and it's going to continue for the foreseeable 3 months or something until the weather gets really cold. So yeah, this is one of the reasons why I got another mic that is more kind of single direction, and it should drown out some of the noise, hopefully. Fingers crossed. Right. So from the weekly chart, supply and demand areas, we have the phase 4, which is a liquidation, aka a downtrend, still happening on those very large time frames. These large time frames we only use for context. We don't actually trade from those levels, but they're more kind of just directional. On the daily chart, there has been a reversal, but until the day is done, we're not going to know whether this is just another correction. And if it is a correction, then I would expect it to actually go to this area here. That is where the sellers came from last time, so thereby that means this is a supply area. Whenever you have some strong sellers that came in, it means that some portion going into that level should be taken. And if it's a reversal, then ideally I would want to see all of these levels broken. As always, I'm using my Blahtech indicators to read all of the stuff relating to institutional order flow and statistical averages as well. So we have Blahtech MP, which is market profile, these weird letters on the side, and this panel. We have Blahtech supply and demand, which is this panel, in all these zones. We have the Blahtech DR, which is this area here. It basically shows you individual session ranges, the averages of the session ranges, as well as the entire 24-hour range and how much the market has actually done so far in the current session, and all of that is highly configurable. With that in mind, let's have a look at the profile. Volume area, value area, and a whole bunch of other things. Initial balance extensions, where those average ranges fall. And then we can come up with some scenarios. The first thing to say is that the market opened below the value area and a little bit below the average, sorry, not the average, below the value area and below yesterday's session range. So the session range is this line here, and the session from yesterday ended at this point. So that's why this other line is there. Good morning, Ray. Good morning, HK. Good to see you. Who else is in? Who else is in? I can see people. Say hello while I'm messing around with the indicators. So yeah, the open below value always warrants some kind of move back to value first before it does anything. Now we've already completed that. Hi Parsa, good to see you. So there was a value acceptance set up, so that's in progress and finishing now. So if you're somebody who trades during the initial balance, which is the first hour of trading, marked in these red bricks, then you might have already had a setup. I don't really like to trade before my 3 p.m., which is 10 a.m. New York time, Eastern, because there's something that happens around about that time that causes quite a lot of influx in volume and can cause reversals. So personally, I just sit it out, and even if there is an obvious setup, 9 times out of 10, I'm not going to be in on it. So yeah, so value acceptance was one thing. You should still put it into your hypos because it did happen. So value area acceptance long was the first scenario. So already finished. Another thing to note today is that the average daily ranges are also being exceeded with this value acceptance move. Now, the second choice, if we didn't have this value acceptance happening, would have been a sustained auction short from the value area edge. So if the market had come up to value, stopped here, or maybe even probed into value, but ultimately didn't close inside the value, then you could have run that. Now, obviously, this is now invalidated because of the C period going above the first hour of the trading range. And because of that, you might want to have a look at a short that will fade this move. I'm not too crazy fading moves after the value acceptance has happened until it's like gone quite a bit further. So I'm still going to put it in, but I'm going to say auction fade short. So fading this auction that we're seeing, but not now, later in the session, just to give the market some time to do whatever it's going to do. And here I'm just going to add invalidated because it went the other way. For the final setup, I might want to look at a late session, another long, but this time from a 30-minute demand that I can see that got created. Strength from initial balance. So where is that? Show you. So that is here. That's my area of interest. So effectively looking for the market to kind of not go any higher and then to migrate all the way down here. And I might want to look at a reaction from here. But obviously that is if the market kind of stops and doesn't have a super crazy up day, this would be an option. Hi, Claudio. Been a while. Right, so that's GC scenarios. This kind of a process prevents you from doing any kind of impulsive trades. And just by the fact that you have these as a part of your plan for the day, it means that you won't be doing anything silly, and you can always keep checking what is going on. If you're very good at reading the profile, then there's really no need to guess. All you need to do is just read the developments. For example, right now, C period went up to close above the initial balance, the red area. leaving some single ticks behind, single prints in the C period. What can happen is that the market goes all the way back down to the initial balance area. But also, if it sticks around in the next 30 minutes, this will mean a very strong auction is happening, and you shouldn't fight that. So whenever you have another 30-minute period that leaves these single prints and they stay after the second 30-minute period is finished, just don't go against it until the market settles. And then after that, you might be able to fade that. Right, let's have a look at crude oil. Also notice that I'm not jumping into this for a couple of reasons. First of all, the average ranges have been busted. So even if this keeps going, this is one of the lower odd days. Like if you observe a sample size of about 500 days and this sort of thing happens, the market exceeds the average ranges, and you try to go against that, you try to go like with the observable move, and like 8 times out of 10, you're going to find yourself in a terrible trade that retraces and goes all the way back, and then you're crying. So don't do that. Even if it goes higher, I'm not interested in low probability trades. I'm interested in opportunities that happen about 70 to 80% of the time when we observe them over a sample size of at least 500 trading days, maybe even 1,000. So about 4 years worth. Right, crude oil. Exactly the same process. So we're not going to be suddenly changing what we're looking at. It's always the same process. On the weekly chart, there was a little bit of a reaction from a very large supply, which is not unusual when you have a very big week. So naturally, they need some room to breathe, and then the market falls. So now it seems like it's kind of consolidating. A lot of anomalous volumes are being shown, which means there's a lot of trading going on, but the actual move is undecided. So that tends to mean that we have to wait for more information to happen. Very much range bound, so we're bouncing between a very close supply and creating a demand, or at least trying to create a demand. But for now, yesterday on the daily chart, there was a reaction from this area. This is a supply. That's where the nearest strong sellers have come from. And now it remains to be seen whether they can bring it down or just stick around here in an effort to maybe do a reversal and go back up. So that's still anyone's guess. That is an unknown. There are unknowns in this line of work that you have to be aware of. Yesterday's session was a little bit muted, so it was very consolidating. Didn't really go far. Hi, Mike. Yes, I sometimes do these. I open up the market briefs so that people can see what the market briefs are all about. So let's have a look at this this market profile, because 4 hours chart is not really saying much. We're opening inside value, which means potentially a very boring day. It's called responsive activity. When you have a potentially responsive day, it means that some kind of ranging strategies are more suited as like a higher odds opportunities. So it's not like, oh, just go and do nothing. But there are some things that need to happen first. Like, for example, the extension of the initial balance first has to happen. Without that, we're going to have a non-trend day, and that means just bouncing here. But because we're inside value, you cannot use, I repeat, you cannot use value edges from the inside to go short, long, short. That is not how you use value. I did a whole YouTube video about it, so go and have a look at it. I was very angry. But yeah, it's something that we tested algorithmically, just doesn't work. So please don't try to use the value areas from the inside value low and value high as some kind of a weird support and resistance thing. That's not what it's about. It's a distribution curve. So because we have a potentially responsive day, the scenarios are going to look a little bit different here. So we're going to go with a failed auction long. So let's say that the market goes down, exits both the value area and the initial balance, and then pulls back inside it. Now that's another thing. You're not using a value area edge, you're using the initial balance edge for your trade location. So price exits IB and comes back to it, indicating that the auction attempt, that a move in one direction, has failed. It was not successful on the first try, and that's never a good thing. You might have some days when that kind of tends to kick off a good option, but that's not the higher probability trade. Second choice would be, let's say this goes higher and it goes all the way up to some of these statistical averages. You see these little dashed or dotted areas. So if that happens, I might want to run an average session range short. Can you tell me, guys, one of my dogs is barking downstairs. Can you hear that? Because I'm really interested. I've got a new mic, so I'm kind of testing it. How loud is that? Because those of you who are on my streams, you usually know how much of the bleed I used to get in the other mic. So I'm just kind of interested how it compares, whether it's like super loud or whether it's just like, slightly. Yeah, okay, that's good. I mean, slightly is good, because before you could hear her as if Lisbon is like right next to me, screaming in my ear. So yeah, average sessions range short from that area is an auction fade. Basically just shorting the auction if the initial balance extends. Now, at the moment, we don't know which side the initial balance will extend and whether it will extend at all. So that is also an unknown. Therefore, this is a complete conjecture. This means that usually when I'm making these plans, I prefer to wait until the market goes outside of the initial balance and then to create my hypos. But because I've got a schedule with the market briefs that usually start around quarter to 10 Eastern time, obviously sometimes the initial balance has not happened yet, so that's why these might be a little bit less likely to happen. But for the sake of the process, I want to show you how this all works. Now, third scenario, I always reserve one scenario on a responsive activity day just in case that we break away from this whole area, go outside of value, either up or down, and then you go into a sustained auction. So looking at the larger time frames, I'm just going to remind myself what we have. So weekly chart, rejection of the supply. Daily chart, consolidation with another area here that is reactive. So I might choose a short here because of that. There's no defined trend. If you have a defined trend like we have in GC futures and gold futures, then that makes more sense. But yeah, here, because also GC and CL have been correlating a little bit, so this would be a more comfortable trade for the gold, for the GC to fall and CL to be dragged alongside with it. Okay, so do I have a fourth trade? That is the question. I don't think so. I don't think I have another one. So let's stick with these three. Sometimes I find 4, other times I don't find 4. I always stick to 4 maximum, because otherwise it means that I'm doing something either too early and then just wishful thinking, coming up with scenarios going, oh yeah, fourth, maybe another auction fade. So try not to have similar setups that that go on both sides. So don't have two failed auctions, long and short. Don't have two auction fades, long and short. Don't have, because that just means you're not taking in the market narrative. You're just kind of focusing on the intraday time frame, and there's other things that happen on that larger time frame, institutional order flow that you can take into account. But at the moment, none of that is applies to crude oil. So let's stick with 3. Claudio, I don't know what this word means and how do you say it. I am foreign, guys. People always forget that while I am, pretty good with English language, it is not actually my first language. Well, maybe it is these days, but originally it wasn't. Canon, cagnon. What is that? Or is that just like a typo? Generally, I don't know. Let me know, Claudio. What do you mean by that? Let's have a look at what's happening in the portal. What's everybody else up to? Have you done any trades? How was your week? Up, down? Did you make money? Did you lose money? Let us know. I had a pretty decent week. I had one day when the market just wasn't really moving. It was Wednesday. But then apart from that, the rest of the days were pretty cool. You can go back. You can join as a member. Even the basic membership will give you access to the member briefs. So yeah, you can have a look at the trades that I was doing. I don't know whether Simon is in here. That looks pretty good, your scenarios. So I'm just going to answer that. And let me just move Restream over to this side. Parsa says, played good music while losing money as fast as possible. Okay, so first advice, lose money slower. Okay, that's the first order of business. And then you become a scratch trader, meaning break even, and then we move on to making money. It's a progression. Hi, Hui. Good to see you. Sponsoring a post from one of my gold members. Nice to see progress when members work every day. It's such a good moment. Oh, right. I see. That means big dog. Oh, yeah, Lisbon is a huge dog. Actually, funnily, I found a photo from a few months ago when Lisbon was still looking like a big dog. So, yeah, I found this. Now she's the smallest dog we have. Like these two are much bigger now. So this is 7 and that's Crichty. And now she looks tiny compared to them. She's literally the smallest girl I have. And yet here she looks an absolute giant. Just crack me up. So cute. Shorting gold. Okay. Again, not too crazy about shorting gold just yet. Value high, not a high probability area. Time of day, also not quite right. And then the C period left the initial balance and closed above it. 5-minute chart also not too strong. This I wouldn't really consider this a strong enough cause to go into a trade myself. One thing that I really don't like about this is that statistically, when you have something like this happening, it's still very, very early in the auction. So even if this goes down, it's a bit tricky to do it from a value high. The main reason why I don't like doing that from value high is because we made an algorithm and tested it over a 5-year period. It didn't work. Like it was like 12% odds of that event happening of a value high acting as a reversal point. So yeah, there's 12% probability of it working out, which means it's not completely impossible, but it's just a lot less probable. So really for my liking and for the types of trades that I do, I would actually prefer to be on the long side of this still. At least until we get to lunchtime, so another couple of hours, or even towards the end of the day. But it is Friday, so it might behave slightly differently. Cagnone, yeah, Cagnone. It's Italian, yeah. Strangely enough, I am part Italian, but I used to be able to understand a lot more of Italian when I was young. That somehow went. I forgot most things. I can maybe say like "come stai," and my name is Diana. Is it Michiamo? Michiamo Diana. I don't know. I forgot even that. You see. Yeah, HK, that's actually one of my setups. Look, I'm using a 30-minute demand instead, though. So if we get there sometime later in the session, that would be a good option for GC. On a 15-minute chart, it might be a weak bull engulf, but on a 30-minute chart, it's a strong one. So are you talking about this one, or are you talking about this one? This is more of a continuation one. And again, this is not really any kind of a level that is of relevance right now. Middle of nowhere area, and the value acceptance is finished, is done. So I would actually prefer to, if anything, like my short is here invalidated, right? So that can be replaced by something else. But even so, I'm just uncomfortable getting involved in at this area. We have the average ranges that were busted, but at the same time we have value high. It's just one of those things where this thing is either going to go much higher, or it's just going to consolidate here and do absolutely nothing. Have to be careful with some of my language on a public stream. Otherwise, I would use FAKALL, which Mike enjoys particularly. Right, so you're talking about this one here. Yeah, middle of nowhere, weak continuation. And main reason why I'm not taking this into account is because the value acceptance is finished. If the value acceptance didn't finish, then I would take it into consideration. However, that's already happened. So if you very closely look at where this candle went, you will see that it actually went almost to value high. into the conterminous line of this area and gave us a bounce. So that's finished. It's done. With the intraday setups, you can only do like a double dip, maybe once. But the more times you try to use a level, the more likely it is that the level will be broken, and that kind of goes for everything, not just like intraday. Yeah, Claudio. I mean, I can actually read Italian as if I was born there. I'm actually part South Italian, from my mom's side. I'm a mix of a whole bunch of stuff. Like you would not believe how mixed. It's all Mediterranean and Slavic, but it's very mixed. Like I literally have Italian blood, Greek blood, Turkish blood, Serbian blood, Bosnian blood. It's like Indian as well. If you go back to probably about my great grandmother, she was from northern India. Like it's really bizarre melting pot in that region. And it's not just me, like everybody in that region is mixed. It's just that it's why we're all olive skinned, right? It's why we all look a little bit ethnically ambiguous, because people don't know what I am. People are like, oh yeah, are you Latina? No. Are you Egyptian? No. Every time I'm in Florida, um, Hispanic community comes up to me and starts chatting to me in Spanish, and I go, I don't actually speak Spanish. And then I actually had a woman who came up to me at an airport, and she started shouting at me saying, you should know your culture. And I'm like, but it's not my culture. And she goes, what do you mean, you Latina? And I'm like, no, I'm not. I am not, I promise. What are you then? And I'm like, take your pick. We haven't talked about NQ. I'm not really considered a very good equities trader. I mean, I do trade equities and I've had quite a lot of success in it. It's just that I'm not the most comfortable with equities. I can have a look at it and I can give you my take on it. But yesterday it was a bit of a blech day for me on equities. Literally, I had a look at it and I went, no. Claudio closed. Okay, very good. Yeah. I mean, like I said, it's a lower probability trade. I don't really like doing those. 10:30 a.m. is the end of the initial balance, but apart from that, it doesn't really have much relevance in equities. The reason why 10 a.m. has a relevance in commodities is because they are what's known as a forex linked product. And there's this thing that happens around 10 a.m. that is very important. So yeah, I mean, let's have a look. HK, not quite, not quite. We're gonna have a look at NQ in a minute. Let me just answer this first. So, I mean, it really depends what kind of a day you have. I wish that it was just like so simple, but sometimes when you have a more unidirectional day on your hands, yes, you don't want to long in the same direction as average session high area. So yes, you want to be further away from that. But once the average range has been done, average daily range high or average session range high don't really have that much relevance. Anytime a level has been tested and retested and it did what it was supposed to do, it's done. Okay, you can't really keep reusing it because that's not really how the market works. So let's drag out NQ, but also with NQ, we had to drag out ES because that is the benchmark, even though it may not look like it because NQ is nuts. But trust me, it is definitely a benchmark for a whole bunch of things. Like if you have something happening in NQ, like let's say a value acceptance, for example, but ES has not done that and it's actually reversing at value high, it's very likely that the NQ value acceptance is a fake out. So until ES does the same thing, it won't be an actual setup. So that's why I don't like people learning on these products, because there's always like an additional problem where you're immediately looking at two charts. So if you're trying to bump up your skills, that just complicates things. All right, so we're going to have a look at NQ and ES, and then I'm going to be done for Friday. I'm going to finish a bit earlier today. ES, what do we have on a weekly chart? We have that potential consolidation with a what looks like it's trying to create a bullish engulfing reversal, but now we have some sellers coming in. So at the moment, it's all up in arms, and until this week is over, we don't know whether this is going to hold or not. So you need to pay attention to that. But seeing how the other sellers were coming in every time they tried to go higher, I'm going to make an educated guess that this is also going to finish the same way, because we have some geopolitical risks that are much more conducive to the bear market in equities than they are for the bull market continuation. And on the daily chart, there was that bearish engulfing. They gave us a very nice sell-off, but quite late in the day. And then today, same conterminous line is being tested, so same supply is being tested, and there's still another reaction. The market is still creating the initial balance range as we speak. So one thing to have a look at is to see how big the initial balance is, just to see whether you might have a responsive day on your hands or not. And there's a formula in the program that I give you to have a look at that. And at the moment, the initial balance is slightly too large. So if anything, I would err on the side of caution and create some more responsive strategies for Friday. Inside day, yet another inside day, which is not unusual since we do have that consolidation happening on our weekly chart. But let's see how many days ES has been overlapping. Finally, we have 3 days of an overlap. So we could have a potential reversal. So that's one value, second value, third value. Now, this bracket looks a little bit more healthy. The bracket from yesterday looked terrible. It was like one value here, then a jump away, and then sort of an overlap, and then so yeah, that didn't look that great. But this, if we can get that reversal, and if the prices actually do go higher and close with some conviction, you might have a correction. So we might have some longs coming up next week. So that's ES. Let's have a look at NQ. Less of a consolidation, so a lot more jumpy, which is a feature of NQ. It's like a crazier sister. In fact, in the prop industry, ES and NQ are referred to as the sisters for a good reason. Weekly chart, again, sellers are coming in, but it looks like they tried to reverse. Nothing is clear on the weekly chart as yet. Exactly the same story happening as in ES. They are definitely mirroring each other, but when it comes to the sentiment, we have NQ, which is doing something weird compared to ES, and this is where that cross examination, cross analysis should come in place. Let me get rid of these rectangles. So have a look at the sentiment in ES, inside open, and have a look at sentiment in NQ, below the value open. So seemingly you have a value acceptance happening in NQ. You don't have a value acceptance in ES. It's just a boring day. It's just like wagging inside the value. So that's what I mean. If NQ is doing a value acceptance, but you don't have the same open sentiment in ES, take the open sentiment from this guy and apply it to this guy. Yeah. Rita says, when I come to these sessions late, I replay the video at double speed. So I just caught up with you guys. Hello, everyone. Hi, Rita. That's a good idea. Mike is saying strong engulfing in crude oil, bearish engulfing. No, it's not too late, but bear in mind that we still have the inside day. So right now, I'm not actually seeing this as a setup. We're still inside value. So at the moment, I mean, it's not like you can't short this. It's just that if you short it, it's going to be a guess that we're going to go lower. And you know me, I don't really like to guess. It's just not something that serves you well after 14 years. I prefer to rely on the facts, and I prefer to actually work with whatever the market is already doing rather than going, well, I think it's going to extend to the downside. And then what can happen is that the market goes back through the entire initial balance, and then I'm looking at a losing trade for no reason whatsoever apart from me not being patient enough. I would rather catch it on a test of the initial balance low once it does extend, or maybe a test of VWAP, or even a test of this supply that's been created, but only once the initiative activity appears, not before. Mike is signed off. So yeah, with the responsive open in ES, you can have a look at NQ ranging strategies. So it would be something similar to what I wrote in crude oil. So looking at failed auctions either side, or even if we extend further, you could have an auction fade later in the day. But if the market actually rejects the value area and extends the initial balance in the same direction, then you'll have another setup for a sustained auction. So let's go with failed auction short first, as a failure of that consolidation. So taking in the bear trend and using that in the hypothesis creation. And then if the market goes lower, you might even want to try an auction fade long. And then, like I said, the third option should be some kind of a breakaway. Let's hypothesize that the weekly consolidation and a bullish engulfing does hold. So that would mean sustained auction long would be a possibility, but you need to go above value high, and IB extension needs to go up. Same direction, rejected value, and then price going into that sustained auction with the same direction of the value rejection, right? So yeah. I know contra trading, that is what most people don't do, which is why I think a lot of folk who just trade NQ, they have limited success with it. And then you start looking at ES and NQ and maybe even YM, and then you start seeing these confluences, and you start seeing the market with a little bit more objectivity. But yeah, it definitely follows whatever ES is doing, but slightly crazily, because it's got more liquidity. It's an absolute crazy product. Unless there's earnings with like the tech companies, then there's a little bit of a decoupling with NQ from ES, but only like on a couple of days, and then it all goes back into alignment. So yeah, once you know that, it's like a very good way to have a slightly different outcome. So rather than blindly going into value acceptances because you're saying, oh yeah, below value sentiment, it's not. It's actually responsive sentiment. So just use the benchmark, use the bigger market for your open sentiment and for your scenarios creation. It's a much better way. All right, so I'm going to finish this Friday live stream here. I don't think I'm going to be doing too much trading today because I've got other things to do. And I've had a bit of a chaotic day today. One of my dogs seems to be a bit sick, so I need to go and tend to her. And yeah, so I've been running around like a headless chicken today, which is probably why I'm a little bit jittery on the stream. Anyways, hopefully these scenarios help you today. But like I said, if you've had profits for the week, do not mess it up on a Friday. That's the worst thing that you can do. I would suggest that you just go and do something else. As always, patience of the secret of patience is go and do something else in the meantime. It's a very good saying, and one that I like to use in my trading life as a general motto. And that's it. Thank you all for being here. Very good questions. Hopefully, you enjoyed this free look, and I will see you guys once again on a Monday. Enjoy your weekend.